There we go. Heidi ho, everyone, and welcome aboard to the Thursday edition of Trading Buddies. I'll just change my name from George to Jeff. I know we look very similar, but it is actually Jeff with you today. And nice to be here. Sorry I couldn't be here with you live on Monday. Been a hell of a week, I've got to say, and nothing has changed. Busy. All right, busy in trading too. Wow, what a SH1T of a week it's been. I'm very busy in managing trades. 5 or 6 positions I've been in, and some not so good, some pretty good, some reasonable. I've had to work hard to keep the money in the tank, I'd have to say. Righto, let's get underway. G'day, Paul P. Let's get underway by having a look at the pound as we go into UK session. That's been going okay, that trade, actually. We'll go through the week if we have time as the show goes on. All right, it appears I'm sharing my screen. There's all sorts of things going on around me here at the moment. Sorry about that. Righto, so today we have a range of 115.27, which is the high of the first bar into, or first bar after, what's that place? Tokyo opened, and the last bar before London opens, which is current, right? So the range at the moment is here to here. As I said, 115.27 is the high, 114.90 is the low. Now, those of you who haven't been with me for the last couple of weeks where we've been trading this, what we do is isolate that range. So Tokyo Open is there, London Open is beyond that candle. So we isolate that range, we pick the midpoint, and if we are above the midpoint when London opens, we enter short at the midpoint, put our stops to entry at 1-to-1, and take our profit at 2.5-to-1. So that's the current model that I'm using. Has been going very well, I must say. Man, if you're in yesterday, short here, TP1, actually probably not far from where that candle is. Can't quite remember exactly. So stops went to break even. Exit was 114.05. Guess where that candle's low is? 114.05.2. What a bugger. So I was asleep when all that was happening, of course. So I woke up this morning and I've got nothing in my account. Well, sorry, nothing in my pound versus US dollar trade anyway. All right, we're getting close. This looks like it could be a buy. If it is close to the midpoint, I won't take a trade. So if it closes on the midpoint, there's no action here. I need a few pips up my sleeve. So it looks like we're not going to take this position today, which is no good if you wanted to see this in action, because we're bang on the entry, right? So it's a no at this point. I'll wait till the candle closes. If we get a sudden surge, then it'll be a long. If we get a sudden surge, it'll be a long. If we get a sudden sell-off, it will be a short. Sorry, vice versa. You know what I meant, I'm sure. But as you can see, we're bang on the entry level, so that will be a no from me, which is a little bit sad. But that's the way she blows, guys. Rules are rules. I've just got a bit of a comment in the background from one of my compatriots. Righto, so that's that one done and dusted. Let's move on, shall we? And I will update you, those of you who, well, those of you who are in the Telegram group will know all these trades that I've been in. Those who aren't may not, but I'll go through them anyway. Let's start with the bad news. The bad news was on NASDAQ. Now, probably need a kick in the bum for this, but I've been trading this for a while, and it is a game changer bar followed by an inside bar. So I'll just trade the inside bar short. And why I need a kick in the bum here is this went beyond 1-to-1, and I didn't take any profit. So the risk was here, right? This little bar we traded here. We got 1-to-1, and I didn't take any profit because I was nowhere near the charts, and I had set my TP1, I think, at the bottom of this on the weekly pivot of whatever that was. So I got a bit greedy there, and that has ended up in a loss, mind you, 0.25%, because I'm just getting used to trading these indices. So I'm only trading them at very, very small risk. So that was a loser. When that lost, I was also short Aussie 200 twice. I'm still in one of them. So we got short Aussie 200 up here. And when that that NASDAQ trade lost,
hi, buddy.
Hello, trader.
Sorry to cut in.
Trader alert.
Long trade. Oh gosh, long trade on the FTSE. Hold on one second. I better fix this up. I've just made a bit of an error. There is a long trade in the FTSE, so I'm going to have to come back to you. I've just made a slight error on.
I'll keep going. You just cut in when you want, mate. Righto. So as soon as that one was a loser, this one here was well in advance of that. And the second position I was in was also going pretty well. So I closed the first position to cover the loss on the NASDAQ. I've still got Aussie 200 going, and it is in profit. We have taken profit already on that position as well. So I'm just monitoring that at the moment because I'm also short.
Okay. Sorry, buddy.
You're right. I'll come back to this.
In my excitement to tell you guys about the long trade, I put in 10 times the amount that I should have been. So I've just managed to, just when it was in profit, I've managed to
save yourself.
Yeah, and made a little bit because it was going up, so it was all good. But a bad mistake. Anyway, bad mistake to be making. But that's all fine now. That should be all cool. So it is for
tempting when that's going in your direction just to hang in there.
Yeah, I know, mate. I know.
I don't know how many times I've done that in the past. You go, oh wow, this could be a cracker.
I've been there before.
Your common sense takes over. Says no.
Well, this is it, and it doesn't really work out. Now I'm going to just have to clear my lines. So I've got a lot of trades on this FTSE 100 right now, but I'm going to tell you what I'm doing and why.
Sure.
We had a winner on Monday. I don't know whether the guys were in that position, but there was a winner on Monday, which is great. So let me just, there we go. Right. Now, it won't be for a lot here. I need to come over here. Do that. Yeah, we'll talk about Monday's trade and see you know, if people traded it and how they traded it as well, because we were discussing stop losses on Monday, mate, and actually, you know, what ended up happening was exactly what I feared would happen if you used a stop loss, and I did explain to people why I wouldn't be using a stop loss, and it'd be interesting to know whether people did do the same as me or whether they used stop losses and got taken out or whether they just managed to hold on. But let's come to that in a minute and share this and that. Okay, so it is for a long on the FTSE 100. Now, if we look at what's going on here, we can see this is just starting to edge to the upside here. Now, this weekly pivot is in the way. Everybody can see that, and a little bit of a problem that the weekly pivot's in the way. But I'm actually thinking that this weekly pivot may well get taken out. And there's a level obviously up here. The obvious level is the monthly pivot, or the one that will be shouting. But there's a couple here that we need to be aware of. And in fact, let's talk about where stops would go. Now you can see that there's a tail here. So my advice would be to put the stop under this bar instead. Now, if if you've managed to kind of get in where we were calling it, then we're looking at at this point here. So that's 50 to the upside, about 20 to 30 to the downside. So it'd be about a 2 to 1 if things work out. It'd be about 2 to 1 if people are getting involved in it. But I would put the stops down here purely because this bar has already gone below these lows, and it does make the stop in that area a little bit difficult. You've also got a trend line along here, which would coincide really well with putting the stops under this level. So stops are going to be around about 30 pips below. This is the target up here. Even though there is a case to be made for the monthly, and I'll show you why. And it's because of the channel. And, we can tidy the channel up by using the bottom line. So we're going to use this line here, and I've just got my equidistant measuring tool. And you can see that the channel looks like there's a touch there and a touch there. This one's a bit false. Now that drags us towards that monthly pivot, but it doesn't quite get there, but it would do if it was to happen. Looks like tomorrow. The issue with holding on maybe for an extra day would be that that ECB press conference and the rate decision. But certainly, as the market stands right now, it looks pretty good, and it looks, as long as it can take this number out, as long as it can take out the weekly pivot before the ECB come out, which I think is in about, what we got. ECB, I think it's in about 4 hours or so, maybe 5 hours.
Yeah, it's normally what, 12, 15 or something.
It's normally sort of there we go, 1:15. So 1:15 UK, it's currently 8:15 UK, so we're looking at 5 hours. So it's got plenty of time. Now, but when that rate decision's out, I think that's going to be an interesting point. I heard earlier 60% of respondents expect them to raise rates by 75 basis points, which means 40% believe that they're going to raise it by 50 or less, which I thought was a huge number considering where they are. I thought it'd be closer to like 80% would think that they are going to raise interest rates, and maybe 20 thought that they wouldn't. So, so I was really surprised by that, mate. That that there is this expectation that that the interest rate rise wouldn't be quite as high. But either way, this is what I'm looking for anyway. Now, if you're sort of just getting involved here, this is the area that I've got in, pretty much around here. And hopefully you can see why, and it's because of this horizontal level here. This is basically a retest area, and you can see that this price hasn't broken down. It looks pretty good. It's attempted to, but it's held on, which is good. But stops out of the way, as I say, down here, and then moving towards this target, which, as I say, that's going to give you around about 2 to 1 if things work out. So we got to see what the ECB say. If the ECB don't raise by 75 basis points, then the market's probably going to take off. And if it's already here, it'll probably go beyond and maybe to the monthly pivot. If it isn't at that point, then it may well drag up to that point. So, it's going to be there'll be a little bit of toing and froing, I think, up until then. But the market was quite buoyant yesterday. I don't know if you saw the price action yesterday, but pretty buoyant yesterday. A decent session from both Asia and the United States as well.
Well, mate, I can say I was pretty comfortable when I went to bed after Asia and UK session, but I wasn't that happy when I woke up after US. There was a little bit of a reversal going on. Yeah, I don't think it'll last, mate. I've got to be honest. The market to me has got, particularly the FTSE. If I look at the FTSE's still got an area down here that I think is going to be tested. But I just think that we are in a bit of a retracement leg, and I think that if we believe the market is going up, if you're an intraday trader, then you really are trying to play the movement up and down day over day. So and I think today we're likely to see some upside. So that's the call, mate. That's why I'm going for it. And you can see this is another reason that the target looks pretty good. Look at these horizontal levels over here. We're talking about a daily time frame now.
So yes, it could be a little bit higher, could be to these levels here, but I think it'd probably be wise to, and prudent to be just a little bit more cautious on this, considering that we are in an overall move, daily trend, daily bars, downside, 4 hour, downside still. There is this higher high here. Do we have a higher low? Unconfirmed at this particular stage, but it's possible that that we do. But it could also be the formation of a head and shoulders pattern. So few sort of questions about this particular area, but as I say, I see a little bit of buoyancy in the market today. So the call is for a long. The other thing, so Monday. Now on Monday we took a trade long on the FTSE, which was Thursday, Wednesday, Tuesday, Monday here. And I was saying on Monday that now at this particular stage, what we had was the trade was at 8 o'clock. So this was the trade here. And I was in at the weekly pivot. Again, same thing, coming back down, testing this horizontal level, this breakout point, higher high, back to test the areas that it had to break out to make the higher high. I was in here. And I was saying that I didn't use a stop loss. And the reason for that was because what I would do is hedge the position if it broke down. So what I was looking for was to hold on. And if this started to break down, as it did, break down, break down, break down, I was looking for that. And then back up, and back up, and then hedge the position on the retracement. So rather than trading it on a breakout, trading it on the retracement. Now, the reason that I do things this way is because of this thing here, of this type of thing. Now, it doesn't happen that often, but it happens enough. So you could put your stops at these lows here. The market comes down, pips you out, and then it starts to take off. And I've been burnt on that enough times to determine that I don't do things that way anymore. I don't put stops down there. I will look at the market and I will use a soft area to flip positions if I have to, but it will still be on a retracement. I'll treat it like I am trading to the downside. If I wanted to take this market to the downside, I'd want to break.
What time frame's that, mate? Sorry.
This is on the 15.
Right. Okay.
This is on the 15. So I would have wanted to see the market break this area, retest the area, and then take the trade. So I treat it the same as that's how I would treat my stop. But obviously I'm hedging instead. But it's the same thing, rather than putting a stop at the lows, because otherwise this can happen. That's why I don't like fixed stops in a particular place. Everybody's different, and if you've done enough research to suggest that fixed stops still enable you to make profit, not a problem at all to use them. That's exactly what you should do. But I just found that that's just not the way that I look at the market. I look at the market and I guess what I'm saying is I don't really know what the exact price is. So as soon as I put a stop in place, I'm saying that's the price. That's the price it's going to turn. And I guess what I'm trying to say is that's the price. It'll probably, that's the area rather than the price. That's the area that I need to take out to turn this market around. But I know that there are orders sat here.
Yep.
Would this be of interest to you, mate? When you saw this come down, test that trend line and produce this bar here, and then produce that one. Would there be an entry above this top, the top here?
That's why I asked you what time frame you're on, because had I seen that on a smaller time frame, that would probably look very much like a false break. But hang on, if I go a little bit tighter on your screen, there would, well, I'd have to pick it up much later, mate. I'd have to pick up the break and retest of the breakout level, which is way above. Yeah.
Oh, here, yeah.
That's
I mean, to be honest, that's the price. That's the price I ended up getting in at first time round anyway. Oh, that was my first position at that particular price. So you would have got the same as me ultimately.
Yeah, I
So,
couldn't pick it up till there
but
at
anyway,
best.
you know, this is the thing, mate. I mean, it's all different approaches, isn't it? And that's what we're talking about, different approaches. I don't use stops in the same way as other people, but I'm not saying by any stretch that I'm right. I'm just saying that that's the way that it suits me to trade.
Suits you, that's right. And you've got to be very very careful too, in particular if you're not experienced at hedging, because if you get two positions in place at the same time and you are leveraged in particular, you can get yourself into a horrible mess. Absolute
big
horrible
problem.
mess.
Big problem. Good morning,
So
Sai, by the way. Just got a message from Sai. He's hanging out by the river. Very nice, mate. Mine just it's
awesome,
very wet.
buddy. You got a fishing pole in your hand or what?
No, mate, it's very wet. I mean, it is actually that sort of weather that is dank. It's not just raining. It's that kind of small but very, very tightly spread rain. It's just a blanket of rain. It's horrible.
Yep.
But yeah, sorry, mate. So you're absolutely right, and that's the big problem. And this is why, again, you know, I don't approach the market with leverage. I don't like leverage. I think it's an evil thing, and can really sort of, if you want anything to kind of get into your headspace and your psychology, it's leverage, in my opinion, because you know, particularly when you actually leverage itself isn't the issue. It's just that if people don't understand leverage and the control of leverage, and they end up over leveraging because they go after big returns, then it'll get in your head, you know, really, really badly. And I've been caught there in you know, historically. That's sort of like why I changed. He's saying he's soaked. Yeah. So yeah. So that's it anyway, mate. So that's the approach. Now, is there anybody in the room that took the trade? I'm kind of interested if anybody took not this trade, and taking the trades that we are suggesting is not mandatory, and we're not even suggesting that you should take them. We're just saying that that's what we're taking. But I'm interested in if anybody did take the trade. I don't think they did, which is absolutely fine. And actually, if this is more of a educational tool than trying to make some money out of what we're doing, I think that's the wisest approach. Because obviously when we come off air, you guys don't know how we're managing things. So I think that's okay. But anyway, mate, that's the call. We'll see how things go. But we are up on the week anyway.
Good man. I'm dependent on what happens next, I think, whether I'm up or down. At the moment, I'm kind of line ballish because I've got two losers now. One, the silver has just been taken out. Hi-ho silver, I can't pick that. I think I've actually got this wrong, and I'll show you why.
Yeah, were you long or short on silver, mate?
Short.
Okay, yeah.
I'll show you why. I've just been through the NASDAQ, right? And the NASDAQ, I should have at least got break even on this. As I said, I traded this little bar here, and it went beyond 1-to-1, and I didn't take any profit, which is silly and very unlike me, I've got to say. And of course, consequently, it turned around. Not at a strong level, I've got to say, but it did. And that one's out. Subsequent to that, silver was also showing me this has just gone wrong for whatever reason. As I said, the market turned around last night. This to me was a classic, just sell it. Phase 1, phase 2, took out the lows. The beginning of phase 3 off the weekly pivot. No, didn't work. So I've just been stopped out of that just now. I'm not saying that can't go, but that looked to be above that support level to me. Looked to be a pretty cool trade, to be honest. But again, because I'm not used to these indices, I only traded that again at 0.25%, so it's no real damage done. I've got two positions currently on Aussie Kiwi. The first one I got in up here somewhere, up here I think. So that's free trading, which is okay. Second position is down here, which is not free trading. In fact, that's in drawdown at the moment. So I'm all over the shop here. I've taken profit twice on Aussie Kiwi pairs. I've taken profit twice on Aussie 200 pairs. I'm still short this one. I closed Aussie 200 this morning pretty much on the open. The first trade, which has kind of got me out of the poo with the other two. And the reason I did that was because I saw, well, two things really. If you're in the Aussie 200, and this is kind of something that you need to look at really. This candle here, which was the close of yesterday, you know, we were actually absolutely going gangbusters when this was free rolling, and then it turned around. As I said, I woke up to that candle, and as soon as I woke up to that candle, I had a look at the S&P 500, which was screaming at me, "Oh, okay, market's turned around, so I better get out of one of these positions." And of course, that follows Aussie follows the S&P pretty much day in, day out. So that's exactly what we've got. I'm hanging in there though with the second position. That's just in profit at the moment. We'll see how that pans out. The Aussie Kiwis you know about. So if you've been in the Telegram group, you'll recognise that I've had a heck of a week trying to manage these trades. And if Aussie Kiwi turns out to be a winner, then I'll win for the week. If it turns out to be a loser, I'll lose for the week. It's all swinging on that pretty much. Was I interested in anything else today? Well, we can go through the week really. There was only one
what you're saying about silver, because you know, and I guess this is sort of like quite an important distinction for people to make, because if you understand what's driving the market, what's allowing the S&P to rally as it did, then you'll understand some of the, you know, why we've got some of the other things rallying as well. I mean, it's not always, you know, absolutely kind of stuck together, but with the dollar weakening, and that's what really happened yesterday. The dollar started to, we started to see those yields come down. So with the dollar weakening, then it enabled the S&P to rally, and it also enabled things like gold and silver to rally as well. And if you start to see a turn in the sentiment of the market, then silver will also take another leg up, because it will be married to probably sort of like closer to the S&P and the FTSE than the NASDAQ, let's say. Probably, not definitely, but probably, because it's growth. You know, silver is a component that's used in growth, so you'll start to see that turn around as well. But I think you're right. I don't necessarily think the area was correct in where, you know, you're selling it off, because I think there's a really strong level of support down there with silver on longer term timeframes. But I do think that all of them are probably going to come down and at least test one more time these kind of low areas. I mean, you've got it on your chart, haven't you, mate? I guess you were looking at the short because you figured it was through, right?
That's right. I thought this is the level for me, this level here. And we had a monthly close below it, weekly retesting it, and the daily already retested it.
Yeah.
So I figured, okay, it might be a bit early. We've had two phases down. If it is early, then I'll probably try and pick it up again up here somewhere. But it was bang on that low as well. So I figured it was just, and I'd probably take that most times, I would think, given that.
Yeah, do you know, interesting with the Fed, isn't it? Because there's talk that the Fed would be potentially raising interest rates by another 0.75%, another 75 basis points towards the end of this month. And yet the dollar did ease down a little bit. I suppose some of those inflation numbers are easing.
Well,
but there's still
really, if you have a look at that, it's looking very much like a retest of the very strong level, which is like 22 years old, right?
Yeah.
That's why. I mean, no surprise, I guess, in that regard. Where is the bloody thing?
We also saw the yen have a bit of a rally today, didn't we?
Did we? I don't know. No,
I believe so. And you know, so what we got going on with things with the yen is that it's getting very, very close to 150, which is crazy. $1 buys 150 yen. And is that the yen you got up there?
No, that's the dollar.
That's the dollar index. Okay, so where's
because I was just pointing out that this level here that we pointed out like weeks and weeks ago, which was, to my mind, the turning point, and I couldn't see it going through that. Well, it went through that, frankly. But as I said, that level there, price has not been there for 21 years. That's turn of the century stuff. So we haven't been here for 21 years. And, you know, to my mind, why the hell would we go? Why would we go straight through there? It doesn't make any sense at all.
Yeah.
And for that reason, you would be expecting a retest of that level. And I think that's
bare minimum,
what's
you?
happening.
Yeah.
Yeah.
If you bring up a yen chart, mate, and put dollar it on yen? The month, dollar yen, yeah.
Okay, I don't have one for whatever reason, but let's find one. Dollar yen will be up here somewhere. Yeah.
No, I know things are changing for all the currencies. Yeah, bring it up on a monthly and look at that back in 2000. Yeah, look at that in 2021, January 2021. What was that low there?
Here or here?
Yeah.
I love that. Here or here. Yep. There.
Yeah, but not a trend line. What was the low? What was the price?
The low was 102.59.
So we're talking about a near 40% rise in the price of the dollar versus the yen.
Yep.
In just over a year. What was it back in 2000? What's the other time there? Is that 2011?
Actually, fall in the price of the yen, because this is
fall in the price of the yen.
Right?
So yeah, dollar yen up. Yeah, so yen down. What was the 2011? Is that 2011, 2012?
Here?
Is that down at 70? Yeah.
You were at about 75.
So the dollar has practically doubled in value versus the yen in just over 10 years. I mean, it's unbelievable. And if we considering this most recent move, it is parabolic. What's been going on in just over a year, basically. We've seen the dollar kind of appreciate by 40% against the yen. Now, at some point, that's going to hurt Japan. It's really going to hurt if it's not already hurting. In fact, it must be. And I think there was a point where people were meeting. There was sort of like Japanese officials were meeting today to talk about the value of the yen versus the dollar. And as far as I'm aware, what have we got today? So we've got a little bit.
But I suppose if you look at it this way, are they net importers or net exporters?
Well, they used to be net exporters. Things haven't been so good recently. Yeah, so trade balances have been pretty weak, really weak actually for Japan. Okay,
so that's not really an argument the other way.
Well, the United States are net importers, and all that's really going on in the United States is that they are importing goods. Their trade balances are also weak, but they're importing goods at much cheaper cost because the dollar's so strong. And I didn't know this, but I've just become aware that if you are a smaller country, one of the smaller nations, you can't take out loans in your own currency. So you can only take out a loan in dollars. So if you take out a loan in dollars, you take out a loan in dollars to get yourself through COVID, the dollar starts to rally like it is. To pay that loan back, you've got to make more of your own currency to manage to satisfy the loan. So it pushes countries, like Sri Lanka and Vietnam probably, into further and further issues. So
it's not just, it's every country in the world has borrowed almost to get through COVID.
Almost. You look at Russia,
and you're telling me that's valued in US dollars, and I'm not going to argue with you, but that's amazing. No wonder the US dollar's through the bloody roof.
Exactly, mate. Exactly.
Jesus.
So we've got a sovereign debt crisis now. And we talk about this a lot, and it's not really sort of something that we should hammer home. But what eventually happens to these countries when they just go, hold on a minute, this isn't the way that we should be doing things. Then they sort of like start to look somewhere else for just a bit more protection. But if you look at the list of countries that have the list of currencies which have devalued in relation to the dollar this year, there's about
out of 30, there's about 4 or 5 that have, and the rest of them just haven't. And we're talking about things like the Venezuelan currency is better, or the Uruguayan. I can't remember which one it was, but one of the South American currencies has done better. The Russian ruble has done better as well. And of course we know why and what's going on there. So, but everything else is down against the dollar. Even China, even the yuan with the exchange rate is losing sort of value in relation to the dollar. And I don't know how long this kind of can last before they just say, nah, this just is, isn't the way we want to do this. So ultimately, the United States are exporting inflation. You've got all these problems coming over in the world. If as a smaller nation, the only way you can borrow is by having dollars, you are basically importing inflation because your currency is devaluing as you're borrowing more money.
Yep.
So,
wow.
Yeah, it is. And as I say, I wasn't really aware of this until a couple of days ago, the actual extent of what's going on.
That just emboldens me further that I want to be a dollar seller as soon as I possibly can.
Well, I suppose this is the point, this
right.
is the point I'm making, is that the dollar is here right now, particularly against the yen. And at some point, Japan are going to have to flip positions. They are a big nation, and they're going to have to flip positions. They can't hold on to this rhetoric that they are going to be staying dovish right the way through the situation. They've got very little inflation. They've got a bit of inflation, but it's not where they'd really like it to be. But it's just one of those things that I think Japan will just have to accept, that inflation just isn't coming in the way they want. And the rest of the world will have to accept that inflation is here to stick. It's going to stay.
And again, not in the way they want.
And not in the way they want. So at some point, those currencies will have to pause or devalue, and the yen will have to flip that, which suggests to me that if we're looking for a short position, anything against the yen at the right point, and I don't think you'll have to take it early. I think it'll be, it'll be loud and clear, and I think it will also be something that will last. The yen looks like the number one out of all the currencies. I think it will last long, but I think that there will be a really good opportunity to make some money out of the yen in the not too distant future.
Might have a bit to go. We'll see. Yeah,
it might get to
nice.
150 or so. But you know what, mate? Nice. You know what, though? As I say, mate, I don't think we need to be worrying too much about timing it, because I think the move down will be so expansive that there's going to be lots of opportunities to get in. I mean, the move to the upside has been so parabolic that what goes up eventually does come down. I don't know if it will come down all the way, but it will come down sufficiently to give us plenty of opportunities to long the yen. And in an environment where there is so much concern going around, and at some point the other currencies will have to reverse position. And if inflation stays sticky, then the BOJ will also have to flip positions, or I would have thought. Then the yen will strengthen sufficiently. But as I say, I think there's going to be plenty of time.
Okay, don't wake me up in the middle of the night then to tell me to get on the yen.
No need.
I'll wait till the morning. Fair enough.
Yeah.
One of the most interesting ones, speaking of the dollar, to my mind, is dollar CAD, and I'm just waiting on this to give me a nice retracement back to this level here. So I think a lower high here really gets interesting. That's 4-hour chart. But I do want to, before I even forget, go to the euro, because we are in one of those positions that we usually are, especially on a Thursday for some reason, where we've got an untested daily pivot and we've got a double top. We want a lower high, or we want a false break of resistance, and there's your target. This played out beautifully on Wednesday, where we're up here, and we got that classic false break, untested daily pivot below, re-entry, retest, enter there,
Are you guys hearing
Beautiful,
Jeff?
beautiful trade. And that's it. Sorry?
Sorry, mate. I thought I'd lost you, but I don't know if it's my connection or yours.
Oh, okay. Yeah, it could be either.
Okay.
I do not know.
You seem
I've got some
okay
weird
now.
stuff.
Anyway. It's probably my
I've
end
got some-
because the weather got quite bad.
Right. I've got some weird stuff going on, so it may well be mine. I don't know. So keep your eye on that one. How do you?
Yeah, so
get into
mate,
it?
can you talk us through that again? Because actually, this is the so I think one of the entries that I've picked up from you is the break and then the retest back into the area to take the trade. So could you go back to the original, the one before?
Wednesday? Yep.
Yeah, this one here. So
Okay,
what
the
you're
way this
saying-
works.
yeah.
Sorry, you asked the question and I'll answer.
Well, I was going to say, what we're saying is that that red bar that creates the tower top,
Yep.
the one that it goes, the first green bar takes the trend line out. Then you got a couple of bars of potential reversal. Then you got the red bar, which creates the tower top, goes back inside the trend line. And then what we're waiting for is the trend line to be retested, but not broken through again, not closed above.
That's not necessary. In fact, if it retested that level there, all the better.
Yeah. Oh, really?
All the
So
better.
it wouldn't matter that
Yeah.
it broke back through the trend line?
No.
Okay. All right. I've understood the entry wrong all this time. Okay.
Look, I won't say 9 times out of 10, but most often you'll find that it won't go beyond there. But that's not compulsory. Really, what really has to get into the head and your mindset is this, and I'll point this out. I haven't got the pivots on this chart. Let me fix that, because it's important to understand if you are trading intraday, this is super important. So there's the daily pivot, right? And what we now need to do is recognize intraday, especially on euro dollar, but you can test this on any chart, doesn't matter what it is. There's a certain thing happens every single day. Sorry, that's incorrect. There's no such thing as every single time in financial markets. But here's how it works. I mean, I don't do this often, but every time I do it, it's the same. So I can't make it up, right? Let me make that just a little bit bigger. And that just a little bit bigger. And what I'm going to do is put the pivots. I didn't show it on every level, sorry. I hope that hasn't reset itself. No, it hasn't. Inputs. True. So what I've effectively done here is put a barrier around price. And what I want you to notice is how often euro dollar gets outside of that area. So how many times can you see euro dollar below here or above here? Come on, how many times?
WR1, WS1, right?
No, DS1
Oh.
and DR1.
Okay.
So this is daily support and resistance. So if I show every time I do a lesson, this is one of the first things I show people. If they want to trade intraday and they don't understand that you can't go long at DR1 and you can't go short at DS1, you just got to look at that chart.
Yeah.
As I said, I can't make this up. This is absolute proof that euro dollar stays inside that range 90-something% of the time. It's amazing, absolutely amazing. So today we look at where price is. Here's DR1, here's DS1. We've got an untested daily pivot. What I would suggest is if price were to get up to here and the daily pivot remained untested, you've got a strong probability that you're going to get a trade down to here. You've just got to find an entry, that's all. You could also find it here. It may happen early, who knows? The one thing I can't tell you is when it tests it, right? But I can tell you the probability is extremely high. So if it got up to here, gee whiz, I'd be almost tempted to place an order without a setup, but I don't do that. I'd wait for a setup here to trade down to here. And if it is a false break of that level, which it was on Wednesday, look at that. And you'll notice time and time again this happens.
Do you know, mate,
Bounces off it,
I've always
goes
sort of
to it.
like I've always looked at this this indicator, and
Mhm.
I found it really interesting because I understand that there's a calculation against the pivot, right? The main pivot.
Yep.
But what I've never understood is why sometimes you get both of the both of the DR1 DS1 moving in the same direction as the pivot, and other times you get them spreading out when the pivot does a certain thing.
Okay, well, that's going to depend on the range of the day, I would imagine. So
yesterday is an
DR
example.
what
Yesterday, an
DR
example. DR1's
Yep.
stepped down while DS1 stepped down while DR1 stepped up with the daily pivot. So they sort of they're not in yet. The day before, they both stepped down.
the day before they both stepped down. Yes, they did. Okay, so what DR1 is and what DS1 is and what the daily pivot is, if you measure the distance between there and there,
Yeah.
guess what that is?
The whole distance.
Yep.
Yesterday's range.
Yesterday's range, 100%.
Right.
So if
Well, that's
yesterday's range, pardon?
That's kind of cool. It's almost like a fib.
It is almost like a fib, I suppose.
Oh, that's
But
interesting. I get it. Okay, yeah. Go on, continue.
the one thing about the pivots,
Yeah,
are their leading indicators. They're telling you where price is going in that day. They're not saying, okay, based on what happened 10 minutes ago, this is what happened. You can see it in the MACD or whatever the indicator is that you use. It's not reacting to what's happening in that day. It's telling you what's going to happen that day. If price goes to here, you don't want to trade it long. If price goes to here, you don't want to trade it short.
got it.
So, and people kind of get confused at that, because I'm not talking about a day trade or sorry, an end of day trade, or even a 4-hour trade or a weekly trade or a trend trade. I'm not talking about anything else other than trading intraday. That's all I'm talking about. So if your stop loss is down here, forget what's going on. It doesn't matter. But if your stop loss is in here, you need to know that there's a probability it's going there, and there's a much stronger probability it's going there. What we don't know is the timing, of course. If we knew that, then we wouldn't be sitting here. We'd be trading from the south of France or something on a yacht. But, you know, understanding that is absolutely key if you are trading intraday. And like I said, you can do that to any chart. This is not just specific to euro dollar. And if you want another way to test that theory, let's get rid of these now. Delete the indicator. It's not the indicator. It'll do. Righto. If you want another way to test that theory, all you need to do is go to the 4-hour chart and do this. Hang on, I'll get my pen. Right, have we had a daily pivot test? Yesterday, yes, tick. Day before, yes, tick. Day before, no, cross. Day before, yes, tick, 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 tick. You starting to get the picture? Tick. Sorry, cross, cross, tick, 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 cross, tick, 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 tick. Righto. So we've just used however many days, I don't know how many, but we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. 23 ticks. 1, 2, 3, 4 crosses. What's 23 over 4 times 100 over 1 or something like that? Or is it 4 over 23? I can't
It's
remember.
about 5.075 or something, isn't it? 5.0708, something like that.
Which equals you're nearly 80%, right?
Yeah, yeah.
You're nearly 80%. Does that mean anything to you? If you're above an untested daily pivot or below an untested daily pivot, you know that 80% of the time, price is going to go from here to here or here to here, depending on what day you're on, or where we are today, here or here, really. Here's your big number, DR1 to daily pivot. If you manage to get up to there and the daily pivot's still untested, you've got an 80% chance that that's going there.
Lovely.
And I've done this exercise, I don't know how many times I've done the lesson, but maybe 200 times in my trading career, let's say. And every single time I do it, no matter how far I go back, if I go back a month, 2 months, 2 years, 5 years, 10 years, 15 years, guess what number I get?
80%.
No. I knew I'd get you. It's somewhere between 66 is about the lowest and 85% is about the highest.
Right.
But that's going back any particular time you choose to name. And that's how simple that is to work that out.
I mean, one thing that that I noticed is maybe not the most recent cross, but there were 2 crosses previous to that didn't test when there was a very, very strong trend to the downside. And I wonder, does that actually mean that if we're in a range, you increase your probability of it happening?
100%.
Yeah,
absolutely.
So,
why do you think I trade it? Why do you think I'm a range trader?
Yeah, I get it, mate. I get it.
Yeah, this is
it.
where I came from. You know, these are my roots right here, euro dollar, because I know exactly
so really,
how
it's
that pans out.
in some respects, it's a case of establishing when there's a trend to trade. I mean, do you know what's interesting here is that you could potentially run 2 strategies alongside each other at the same point, you know, to take them both at the same time. One as a trend trader, one because the difficulty is when is it going into a range and when is it going into a trend? Now, if you understand fundamental data, it's easier. It's easier to sort of establish when it's going into a trend because volatility picks up and, you know, and you understand what might create that volatility. But if you're not a fundamental trade, if you don't understand the fundamentals, then actually looking at the technicals, I wonder whether there's some value in trading both on the same day, every single time. And I wonder whether one smooths out the other. Or it just means that one smooths out the other so much that you end up with break even. Because surely there's going to be some point where you've got actually both enter slightly different parts of the day, but one will, and they both win.
Yes, I've done that. The problem I would have with that is that I use stops. You would have less of a problem with that because you don't use stops.
Yeah,
in fact, that should work very well for you, I should imagine.
Yeah.
That makes perfect sense. Maybe
Interesting,
I should try that.
Well, you know what? I mean, this is where, I mean, you have to kind of get in touch with Lloyd because you'd want him to build something for you that at least indicates when you should be looking at stuff. Because doing this, I mean, I've sort of gone back and tried to do things, try to eyeball stuff on a back test. And it's, if you're doing a 15-minute time frame, it's a long process to back test. You do a daily, totally different. You know, you can do sort of daily time frames because there's one bar every day, so not a problem. But with a 15-minute time frame, you're talking about potentially, you know, what, up to possibly 8 entries a day, you know, in a really extreme day, and at least 4. You know, sort of at least 3 or 4 entries a day. So you've now sort of increased your backtesting time by, you know, 4-fold minimum, 5-fold potentially. So you'd need somebody to build the indicators for you on the chart, just so you know exactly when to look, rather than having to, you know, scrutinize every single day, which it is. If you're backtesting a 15-minute time frame, you are literally scrutinizing the whole day. Very difficult.
Yep. Look, I promise you, when I get back to full-time trading, I will develop those little strategies on this theme. But you know, I just haven't got time. Simple as that. I mean, my eyes are hanging out of my head now. I've just done like 11 hours work before I started this.
Well, it's interesting. In a lot of ways, mate, you've developed it by trading it over a long period of time. But I suppose it's how you can tweak it, isn't it? That's what you're really talking about.
Which is my favourite way. But you know, over the years, my bank account would probably disagree with that, because testing forward can be expensive. But I've never really bothered to test back, other than this particular circumstance, because I just, it's the one thing I used to do every single day for, you know, 7 or 8 years. It's the only thing I traded. Euro dollar, 30-minute chart. I mean, you just get to know it, don't you? Same with you with the FTSE. You know? You just get to know it so well that you know, or hang on, no, this is just doesn't feel right, or okay, load up, time to get in. You get that association with it, and I can't wait to get back to it, frankly, because the only time I'm in front of these charts at this time of day now is in trading bodies. And as soon as we're finished, I'm out of here. You know? So I haven't got time to hang around.
Yeah, you know, it's a funny balance, isn't it, with trading? Because actually, you know, going to the other extreme where you're looking at charts all the time can be very damaging, and not very healthy either. You know, for your bank account or for your headspace. But not being in front of the charts enough means that you're not taking advantage of moves that happen at the times of day that you're just not in front of the chart. So it's a balance that you know, everybody needs to address, and everybody needs to understand that time in front of the charts doesn't always equal money made, because it can also equal mistakes.
It's a very old saying, of course, that you can't put old heads on young shoulders, and that couldn't be any truer in what you've just said. Less is more. There's no question. Less is more once you know what you're doing. But to get to know what you're doing, you have to spend time in front of the charts. So you have to understand what the charts are doing. So there are no shortcuts, never have been. I don't care what you throw at me. It can be crypto, which is, you know, heaps of people have made lots of money. Whether that's luck or just timing is neither here nor there. But there are no shortcuts. You know, you have to do your homework. You have to put time in. And once you put that time in, then you can sit back and kind of go a little bit easier and pick your time of day to trade, pick how long you want to spend in front of the charts, because you've then got options. And the options are, okay, I want to trade daily charts only. Okay, great. Trade the daily wave ride. Or I want to trade 1-minute charts or 5-minute charts. Okay, George, if you want to trade only at a certain time of day, Ash, myself, you know. There's that many options that you've got down the track once you've actually got into the system of learning. And, you know, everyone starts with a system or a strategy, and I get that, because you have to start somewhere and you've got to have a set of rules. But once you've under that constraint, and of course we all go outside it and lose money and all the rest of it, but once you've spent time under those constraints, you want to break the shackles, and because you know more, right? You feel, okay, I'm missing out here because I'm constrained by those set of rules. and I can see other stuff
Yeah.
happening that I want to explore.
Well,
Whether
you know,
whether that's by another mentor or another teacher, or simply by what you notice yourself, which
well,
is
I
what
think
we're aiming to do.
I
That's
agree,
what we're
mate. Do you
aiming
know
to
what? I think that's where you know the old head on young shoulders really comes into play. And again, I was speaking to Lloyd about this a couple of days ago, and he made a really good point that you know pretty much all strategies work at some point. The key is to know when to use them. You know, because you can have an approach. You can have an approach to anything. Let's say that you know if you're training at doing something. I don't know. Let's say you learn topspin as a tennis player. You know, topspin is going to work as a strategy to get the ball, you know, back to a certain place at some point. But it won't work for every shot that's coming at you. If you're faced with slice, I mean, don't get me wrong, I've known nothing about tennis, but if somebody sliced the ball back, it suggests to me that maybe topspin probably, yeah, it wouldn't be so good. But again, you know, it's a strategy, but it's that's when the old head comes on to say, now's the time to pull the trigger on the strategy. Now's the time to not pull the, you know, the strategy's lining up here, but there's something else that's not right. That this environment doesn't work for this type of strategy. This type of approach is not good for this environment. So I am not going to use it. But if you understand when to use the strategy, when to pull the trigger, then you've just increased your probability of success with your strategy exponentially, probably.
Yep.
So
your earning capacity just went through the roof. Yeah.
Yeah. So I think it's really important to learn a strategy, but also to recognize that all a strategy are mathematical things lining up. But this is where the art comes in, that trading isn't just mathematical. It isn't just a science. It's also an art, because human beings are involved, you know. So that there are sort of like you know, things outside of what you're doing that that mean your strategy just won't work in certain environments. And how you learn that really is time in front of the charts, time with you know, people like us and others discussing market environments and you know, understanding that there is a change in environment. Yep.
Look, we come to this point in many different ways, but essentially, I suppose we start out in the same position. We're all going to go in different directions. We've all come to this point in different ways, but yeah, there is no substitute for, in the early days, learning your craft by time in front of the charts. I think that's essential. Yeah. Now, I think it's quite the reverse for me. The least amount of time I can spend in front of the charts, the better.
Yeah, agreed, mate. Well, we are at the top of the hour.
Yep. How are we going? Aussie 200 is looking a little bit better. Aussie Kiwis just dancing in midair. I don't know what sort of week I'm going to have until the end of today. I don't think. We'll see. Yeah. So far, it's been very topsy-turvy.
Yeah, it is. I mean, we got the FTSE trade on just slightly in positive territory right now with the trade, but it hasn't really gone through the weekly pivot, so we're still waiting on that to establish itself. I don't think anybody's in the trade anyway, so I won't go back over it. And if anybody's got any comments they want to make in the chat room, if there's something you're trading you want to look at, we can still do that quickly before we go. But I guess if not, then we will call it here and we'll just come back on Monday.
Yeah, look, don't forget those people who are in the room, who are probably not in the room all the time. This is not just, well, in fact, it's not about Ash and myself. It's about you guys. We're trying to create a community where we share things, right? We're more than happy to share what we know and what we've learned and what we do. We're pretty transparent in what we trade here. If you want to share that as well, please do so. More than happy to have you on camera, have you share your screen, share your charts, or if you just want to ask a question, don't be shy. We're not here to be shy. No, thank you, Anne. You are more than welcome. That's it's great that you're learning, and I suppose when it does come down to the learning, maybe this is what Jeff and I are saying. If you want to make the learning a bit more focused about something that you know you do understand a little bit, but you want to understand more of,
then the euro dollar nuggets. Oh, that's you really, Paul. That's not me. That's Jeff.
That was
all I can tell you
that was my rugby league nickname, Nugget, for obvious reasons.
Is that because you look like a big chicken?
Yes.
So the euro, all I can tell you about the euro is about the ECB. I can just tell you about the potential sentiment, and that I think it's weird that they're only going for 60% potential for 75 basis point. I just, honestly, mate, I'm astounded by that. Only 60%.
Yeah.
Are they kidding? I mean, that places in all sorts of, like, inflation in the Eurozone is just obliterating the market. And they think they're only going to raise it by 50 or 25. I don't think that's possible.
Well, nobody else seems to be doing it. That's a fact. I think
they're way behind the curve. They're way behind the curve. They've got to get on it. They've got to get on board, you know. I know they started last time out, but they've got to go again.
You're not thinking one again, are you?
No, I don't think so. No, I wouldn't. No. But I think 75, you know, I suppose my point is that how can you almost have 50-50, a 50-50 choice there, where it could be 75 or they might go a bit less? It just surprises me that there's not almost certainty. They're going 75 and you know, we'll see where we go after that. But you know, the fact that they're going for that surprises me. Yeah,
you must have some conservative people over there, mate.
I think so. Yeah, as I say, if anybody wants to sort of focus the question, then you are welcome to do so. If you've got a specific question about a currency pair, or if you've got a question about the fundamentals, or maybe a technical approach that Jeff and I may take, or even if it's strategy specific, we don't know all the strategies, but we do know enough about some of them to maybe discuss. Generally speaking, we wouldn't bring up the proprietary indicators or anything, but generally speaking, we can discuss the strategies. So if you got any questions like that, guys, you're always welcome to ask, and that's what we're here for. As Jeff says, come on camera if you want, come on mic, but not camera if you want, or just put it in the chat box. You can share charts. We can give you the screen. You can share charts. We can see what you're looking at. All of that is really what the show is about. We don't do enough of it, Jeff, and I think that's probably our fault for maybe not saying it every time. We sort of forget. Yeah. We get into a bit of a flow.
Every pancake day, we sort of remember that, don't we?
Yeah.
If it's pancake day, I'm in.
Yeah. Okay. Well, if there's no other questions, we will get going, mate. And
actually, sorry, I should just one word of warning on the euro dollar stuff. Wait on this one until after the ECB, right after the press conference. And you may get an absolute bonus with the ECB announcement, pushing price up to here. And then you know what to do from here, right? You look for a setup to trade back to here.
Yeah.
But I wouldn't get in the market
come back
now.
Today. Do you know what? It's all going to be, as always, about the press conference, isn't it? The actual rate decision itself will cause some waves because there is the indecision. But it's going to be about the press conference.
Yeah, look, but what can they say? Really?
I don't know, mate. Well, maybe look, we're going 75 this time, but we are market specific, market dependent, and if we continue to see weakness, we might need to reconsider. I don't know. Who knows? Or they'll get very hawkish.
They'll say we're SH1TTING ourselves, and we've got no idea where to go next. It's as simple as that.
Oh, new British PM, mate, as well. We didn't discuss that. New British.
Oh, yeah, indeed.
Yeah. She's in the hot seat. I had somebody telling me that the euro, the pound was going to strengthen against the euro because of the PM. And I said, no, we know the PM's going to be. It's not going to, it's not that surprising. It probably won't strengthen. And if it does, it may not last long because you've got ECB coming out on Thursday. And in this example, it actually was sure enough that the pound absolutely tanked really after Liz Truss made her first PMQs.
Why do you think that is?
Because the pound against the dollar is at the lowest level since Margaret Thatcher. And she has gone out and said that she will not enforce a windfall tax on the energy companies. So the pound is weakening. The FTSE really is a bit flat right now, but the FTSE should get a boost off that because it means that businesses are protected. So yeah, the windfall tax seemed to be the reason. You know, the fact that she's not going to go and see if she can collect some money from these energy companies. I mean, we're talking billions. The amount of profit they've made is in the billions. And France are doing it. They're going after them. Many other countries are going after them. The equation doesn't make any sense. She's saying she's not going to do it so she can secure some business, you know, investment into this country, which I understand. But every country pretty much around this region is doing it. So one thing you won't have is business investment coming away and saying, well, we'll find it better somewhere else because that's not available. So she could have done a little bit and still kept the business investment attractive. I think that they've, you know, to come out and say we're not going to do it at all is a dangerous game. We're talking about borrowing billions, 200 billion, I think that we're talking about, which is like 20% of GDP. It's just we are being pushed into it.
How's the debt level at the moment? Before
over 100% of GDP.
Yeah. Wow.
Yeah. Big trouble.
It's not a rosy picture, is it, at all? But
no,
it's not isolated either.
No. Big problems, mate. Big problems, and you know the European Union's in even bigger problems. So, but company multiples in the UK, 4% dividend, which isn't on offer, but you know, in many other countries. So the FTSE could still bubble along quite well off the back of that.
Yep. Wow. Okay. It's not a simple issue. It's very complex.
Very. Way beyond our pay grade.
Yeah, I'm going to say, where's Julian? We need an economist specialist to step in and say, well, here's what's going to happen.
Yeah.
But I've got a fair idea that I want to be short the indices and building up to a big short the US dollar. Timing's everything, of course.
Yes, totally agree with that. All right, mate. Well, let's call it there, and we'll be back on Monday. Thank you so much, guys, for being our trading buddies, being here with us and participating. Thank you to you, mate. Great to have you back. I guess.
Yeah, sorry about Monday. A little bit of an emergent happening there that I had to take care of. All good. We will catch you guys on Monday, hopefully. Those of you in the Telegram group, if I need to update anything, I shall. And have a lovely weekend. Thanks for being our trading buddies. Bye-bye. Thanks.